Good evening, all. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday, the 4th of August, 2020. We're right now at about 6:40 p.m. Central Time. My internet just came back up along with my TV. I live right in the heart of Chicago, one of the hottest areas in the city, believe me. And they are rewiring so much where I live, we lost the internet. Now, I tried to this morning put out a report for you using my phone's hotspot to upload. I could not get it done. I've spent hundreds on extra money. Believe me, Infinity's going to get a bill from me, and we'll see how that goes. I have the business lines. This is as much as you can put in a home in the area that I'm at. So it's not that I'm not trying. Look at the gold, 2043. There is so much money pouring into this market now, it doesn't really care. It's going there at reckless abandon only because if you take a look at notes and bonds, you realize a 10-year note now is like a 0.517 yield. New all-time low. The week's not over, but this could be an all-time low close. Silver's not being left behind. It's on a tear to the upside. We know, KNOW, we know it's not because of industry. Copper's really not moving with the market. This is a play that is looking at, hey, there are no interest rates. The Fed wants to print money, going to keep interest low, and now we're seeing Congress is working on coming together. It's not going to be a $1 trillion package. I don't know if it'll be the $3 trillion plus package that the Democrats want, but it's somewhere in between. And that's somewhere in between. People are saying, at what point do you have to start paying this back? And they're plowing into this. That, of course, has been stable now in the euro at the 118 level, and the dollar's down a little bit too. So let's take a look and see what we've got. For the gold market, we're only up $38 for the week. It's only Tuesday. That's a pretty good rally. And every time it makes a new high, it is an all-time new high. And that's what you're doing on the daily chart. The D's gold at 2044, a new all-time high. So gold is in what we'll call uncharted territories. Could it go to the 2600 level? I'm hearing talk. I got a call on that today from somebody I respect as a chartist. In looking at the swing lines, we're looking at markets that got higher lows, higher highs. That's what I care about. The trend is up. When I go to the moving averages, you can see that the market's got the swing line is up. The market's over the 18-day average, which is over the 100, which is over the 200. So here's your bull market. The market is staying to the right-hand side of the upper Bollinger Band. That is so important because it means the market's not getting ahead of itself. Now, if you'll recall yesterday, I said, gee, we got a breakaway. We didn't hit that upper Bollinger Band. Today's high was 2037.70. You went through the upper Bollinger Band. So bring right back to it. And tonight you're close to it, but that gorilla glue is still very much intact, as I like to call it. And slow stochastics, they're telling you that on healthy breaks, the market's being bought. Now, what's healthy? That's the dilemma. You only had a $50 break here. $50 in normal times, that's $5,000 on a futures contract. That normally is a heck of a break. You go, whoa, look at that, a $50 break in gold. The higher you go, the less important a $50 break is. You'd have to break right now to get here a $100 break from this high. Get what I'm talking about? You got to understand how it works. Margins in gold, they're destined to go higher the higher the market goes. The gold-silver ratio, back to 76. Now you were at 125 up here. So it is crashing in, which means silver is not being left behind. It's gaining on gold. And in true bull markets, and I've mentioned that to you in the past, you get the other metals coming alive with them. Silver is proving it's doing that. It's gaining on the gold. Here's the SEP silver. SEP silver has a pattern of higher lows, higher highs. Now, I haven't moved to the D silver because it's not where the volume is. It is still very much in the September. I love when we get D's versus D's. It's a cleaner market. That's why I do it on the ratio, but not here yet. This is the spot I still think that the traders are at. You're very overbought. Unlike the gold, this is not that gorilla glue trade, but it's clear as can be. Do you realize what it would take to get back under the last break low of 2,300? That would be a break from the current price of $3.45. Wow. You had a monster break here, so don't think you can't get big breaks. This was a $4 break, if I'm right, from the high to the low. Do you see that? $3.80. So don't be put off that you can't do that. You can, you will get big breaks. I don't know if they'll be that big, but they're going to be big breaks. In the copper, this is what I'm saying. This is the industrial part of what's going on. And you're getting the congestion. It's coming together. It's no longer the wild swings in the market. Now the market is entering what we call a pipe, the sideways action. The pattern is one of a higher high, lower low, which is no trend. And what are you doing? Day in and day out, you're hitting that line in the sand, as I call it, the 18-day average, which is where eventually a trend sets up from. In the platinum market, you're not trending. You had this monster break day. You had a higher high, a lower low. I want to repeat again, this 18-day average, so important. It's what the market is hanging its hat on. Right now, I see a void of a trend market. The bias is up, momentum is still up, but we don't have a swing line that is up. And the same thing is not true today of the palladium. It got high enough today. This is what it looked like coming into the day. This is Monday's action. You had really a pattern of a lower high, higher lows, trying to set it up. With today, you got through this 121.89. Did I say 121? 21.89 to 21.92.20, turning the market now to the pattern of higher lows, higher highs. So I think the pros are going to buy the market at 21.65. Their stops will likely be under the 21.03 level. They'll see if they can get something going in the market. If they can't, what's going to happen is like in copper. These two numbers, these Bollinger Bands, are going to come crashing in because the lack of volatility will draw in the Bollinger Bands. In the dollar index, you're void of a trend. You have a market that's got a lower low and a higher high. If we look at the reading here, one number's over 20, one number's under 20. In other words, you lost your embedded reading. You can see this. Watch. You lose the reading today. You're keeping it lost yet. We don't know. Remember, it's not open yet. Can it get it back right away? It can. And that's the key, all right? Will this market get it back? And if it does, that means that was the correction. And if this market starts down with a power here, I think you could go for those lower lows again, because this will rule the day, not the chart action. The momentum will rule the day, in my opinion. I talk about this, and even with my internet connection that I started telling you about, even with it, I was able to post my morning subscriber video. I have ways of doing that. These are my problems, my afternoon ones. But what you can do is, if you get into those, I am so specific. I mean, no one's going to ever call me shy. And what I'm doing there is I'm saying I want you to buy here. I want you to sell there. This is where your stop is. This is why I want you to do this. In my written update, I did this. I'll bring those people up to date with what I'm doing. It's 40 charts on the futures markets. At about 5:40 in the morning, I'm recording typically. I'm going to give you a touch of the fundamentals. So we're going to talk about Asian economics. We're going to move to Europe. Did anything big happen there? And what's going to happen in America? Why? What's going to happen? Typically, nothing has until 6 or so in the morning when the first economic reports come out Central Time. Most come out later than that, 7:30 to 9. We're going to cover every time in this exact sequence the markets. There'll be a slide bar at the bottom. Let's assume you just want to get to the metals. Just grab the bar slide, and the big word's going to say metals. Let go, it starts playing. The idea is to save you time. Got it? Because I do it in the same sequence each time, that works. And believe me, I get emails, and I have them, of people saying that saves me so much time. Thank you so much. I can go right where I want. You can also watch this stuff on our QT Mobile. It won't have where you drop off that way. You have to play with it. That's because we can do it on our website. We can't on that particular site. I'm sorry about that. But then that's because it's mobile versus a regular PC site. First 30 days, the price, come on. It's the price of a Starbucks, one of the large drinks. For 30 days worth of data versus 15 minutes of I enjoyed my cool drink. I don't know. You take it from there. To find out more, www.iraepstein.com, the word research. We'll take it the rest of the way after you do that. Have a great day. I'll see you all tomorrow.